We recently sat with the management team of Diversified Holdings, a unique small-cap company listed on the New York Stock Exchange under the ticker CODI, CODI. This was management's first in-person meeting since the beginning of the pandemic, and we were excited to join them to discuss their record 2020 and recent developments. Diversified is akin to a private equity fund which targets the acquisition, value-add management, and opportunistic divestitures of middle-market companies with leading market positions and significant cash flow. The company uses its permanent capital base of debt and equity and does not have the typical fund life-related pressures. Trading at around $25.50 a share, CODI has a $1.6 billion market cap, $930 million of net debt, $315 million of preferred stock, for a $3 billion enterprise value. The company has paid out a quarterly dividend of 36 cents since its IPO in 2006 for a current return of 5.6%. Currently, the company has 10 diversified businesses. Its businesses are split between 6 consumer brands and 4 niche industrial manufacturers. Recent consumer brand acquisitions include popular brands such as BOA, a dial-based micro-adjustable fit system for sneakers and medical bracing products. Those of you avid bikers or golfers have likely seen their product on popular brands. Additionally, they acquired Marucci, a fast-growing baseball gear manufacturer used by approximately 50% of MLB players, according to the recent study by Bat Digest. The 4 niche industrial companies include Sterno, a leading manufacturer and marketer of portable food, warming, and lighting products for events, outdoor, and home decor. The diversity of businesses played an important role during the pandemic, which saw some pressure on the industrial holdings, more than offset by robust growth from its consumer brands, which benefited from consumer interest in outdoor and recreational activities. Q1 2021 saw continued strength in the consumer brands, with EBITDA up 82% year over year, strong backlog, and a continued rebound on the industrial side. Management increased its guidance to a midpoint of $335 million of subsidiary EBITDA for the year 2021. Current CEO Elias Sabo took the position in 2018 and has doubled down on the consumer side of the business with an ESG focus. Elias has a successful track record, having led the management and subsequent IPO of Fox Factory, a power gear manufacturer, in 2014. Fox Factory currently has a market cap north of $6 billion. Management took advantage of a hot market in 2019 to divest 2 holdings, accumulating approximately $700 million of proceeds, and pivoting itself to consummate 2 platform acquisitions in 2020. Using only approximately $600 million of capital, management brought on BOA and Marucci, generating the same amount of EBITDA and yet growing at a much more robust pace. Over the past few months, management also refinanced its entire debt stack at a rate of 270 bips below its previous rate, with no debt maturities until 2029. The company still has approximately $600 million available on its revolver to pursue additional opportunities and acquisitions. A most recent development, which should excite investors, is the recent announcement of the company's switch from a K-1 pass-through entity to a C Corp, subject to shareholder approval and expected in Q3 2021. This will open CODI to a large investor base, make it eligible for indices, and the option to use its stock as currency as it continues to grow its platform. The company intends to issue a special dividend to offset the increase in basis for shareholders and anticipates that going forward, it will maintain its 25-cent quarterly dividend, which will equate to the average yield of 70 cents annually that shareholders benefited over the past 15 years, net of tax on gains from divestitures. Management recently guided to $2.20 per share of free cash flow at its midpoint for 2021. Recent market activity values CODI at 11 times management's free cash flow estimates. Our meeting gives us confidence that continued financial and continued operational leverage will allow management to continue to grow its free cash flow and more than cover distributions. Thank you for your time.
Investors should carefully consider the investment objectives, risk, charges, and expenses of the fund before investing. The prospectus, which contains more complete information about this and other matters, should be read carefully before investing. To obtain a prospectus, please call 1-800-GABELLI or visit www.gabelli.com.